Good day, everybody. It's Trent Klarenbach with Klarenbach Research. Today is August the 13th, 2025. Big news with Chinese tariffs on Monday. Caught a lot of us off guard here. Was not anticipating that. Was not on my bingo sheet. But we'll start looking at multiple time frames here to get a good sense of where this is, where the price could go, and if we're finding some support or what to expect or anticipate in the future. So the first chart here I'm going to show you is the weekly canola chart. It's so each candle stick represents 1 week time frame, and we got our moving averages on here. You're used to them by now. This purple one's the 200-week moving average. It's overhead and declining. The green one here is the 50-week moving average, which to me is always significant. I like to know where the price is in relationship to that 50-week moving average at all times. Gives me a good sense of where the medium-term time frame is. So, if you take a look at this week's candlestick here, it's forming a long wick at the bottom. Now, what is it? Today's Wednesday. Yeah, today's Wednesday. We have 2 more days to go in the week. I think the tariffs are poised to come online here tonight. So I expect some volatility in the marketplace tonight, or maybe even tomorrow morning when the market opens up, when the trading really picks up in the morning. But take a look at this here. Look how the price is staying above this rising 50-week moving average, okay? Now that's a positive sign. It suggests to me that the medium-term trend is still up, right? So we've had a sell-off here since June, but we're still above this rising 50-week moving average. So I consider that to be a positive thing. Right now we're finding some support from these previous resistance levels. We'll see how the week closes, but there's a bit of supply through here, even going back to this previous closing support back here in June of 23. So it's a significant level. And what happens is this previous resistance often acts as support. So will it continue? Well, 3 days into this week, it looks like it's going to, right? But more information comes tomorrow and the next week. This purple line down here is the volume weighted average price from the September 24 low, right? So September a year ago. That's the average price paid per contract of canola since that period of time. And again, that's in confluence with this 50-week moving average, both of which will bring in buyers in this scenario. When there's 2 of them lined up like that, our conviction strengthens that we do see some buying at this level, which I would argue we're seeing here this week. So I got a call from my buddy Darren today, and he said, Klarenbach, what should I be doing? And he wants an answer whether he should be shorting. He wants to short the market, protect his downside risk, which is probably a good idea. But I expressed him the challenge right now with what he's seeing from myself and other people he's talking to is there's a fair bit of uncertainty here, and I'll show you why. This is the daily chart. A lot of lines and squiggles on here, but let's just clean this up for now. So what happens is we want to really look for the lowest risk, highest probability ideas. That's my job, is to present to you the lowest risk, highest probability trade. So we want to, number one, we want to be with the trend, right? We also want to be we want to have alignment of the trend across multiple time frames. So the example I showed you earlier with the weekly chart, I would argue that the medium-term trend is still intact and it's rising, right? The daily chart, however, right now we came back down and tested that 200-day moving average. We're trading right at that 200-day moving average right now, which I think is significant. But this morning we were trading a little bit below that. So right now we're trading at this make or break it zone for me on canola. We want to stay above that 200-day moving average. Right now we're testing it. Any given minute we're trading below it. It's really this level of uncertainty. So I don't consider that we have great alignment across multiple time frames. Plus this 50-day moving average overhead here is declining. I really want to see that the price above a rising 50 and 200-day moving averages to build up my conviction. So I'm going to turn some annotations back on here just to dirty this up a little bit. So I got this VWAP right here. Let's just change this here to get a different color on here. Let's change that to blue. I like blue. So this is the VWAP from the September 16th low here of 2024. And that's, I would argue, we're finding some buying at that level. So that's the average, again, the average price paid for contracts since September of 2024. And that's acting as some sort of support, I would say. We just anticipate some buying at these VWAP levels, and I would argue we're seeing that today. We really need to get it back above that 200-day moving average, so it's really uncertain how to approach this at this moment. Talking with Darren, he believes that this is a golden opportunity. We're handed a gift to sell, that the price is going lower with these tariffs tonight. I'm not so certain it's not priced in already, but it gets extra confusing for me right now because I look at this possible head and shoulders pattern here. And I mean, we do a measured move. We come down to that 600 to 580 level really easy. And I want to be aware of that. So maybe that's already happened already. So, but again, I want to see what happens with these tariffs. How's the market going to react to it tonight and how it's going to react to it tomorrow before I make any rash decisions. But Darren and I, through our discussions, we talked about what he should do in his farming operation. And he really wants to produce his downside risk. So the question I always ask is, where does your stop go if you're wrong, right? So he's going to look at it from a hedging perspective, I believe. And he's interested in doing, going short December or November canola. And the question is where are you going to get out when you're wrong? But it's as a hedge, he's in theory going to be making it up on the cash side of things too. So really, I think if we have strength in our conviction that the trend is reversed higher and the price is going higher, somewhere above 700, maybe above 707, 706. And then at that point, I think it'd be, you might want to look at taking that hedge off and just letting the cash ride, make some money up on the cash side, cut your losses on the paper side. Just be aware that, from say 660 for round numbers to 700, that's $40 a ton. So just be aware of what your losses are ahead of time. Be prepared for that. But that's how I would approach it if I was a farmer today. Now, if you hedged up here, like some guys did, and I identified this as an area of resistance, I didn't have a concrete hedge your position level there. But nonetheless, if you did up there, it's been a great trade for you so far. So kudos to you for doing that. But I'm wary about this head and shoulders pattern. But I'm getting mixed messages on the weekly chart and the daily with this anchored VWAP and these moving averages. My name is Trent Klarenbach. Sunny in Saskatoon. Life's good.